la tra la tra la la tra la la tra la tra la la tra la la tra la.
Today, we are coming to you live from Event Cinemas at Robina. Today, we will be analysing the top 3 companies within the entertainment industry. These companies are Village Roadshow, Amalgamated Holdings, and Ardent Leisure. Through our presentation, we will recommend one company to invest in. Ardent Leisure is most commonly known for Dreamworld and WhiteWater World. Amalgamated Holdings is Australia's entertainment and hospitality leisure company known for its event cinemas. And Village Roadshow is known for the other theme parks on the Gold Coast such as Wet n Wild, SeaWorld and Movie. These 3 companies are in direct competition with each other and hold the most market share within the industry. I will now pass you on to Vaughn, who will look at all 3 companies' ratios. This includes the performance analysis, which discusses the activity ratios and the profitability ratios. Then we will discuss the financial strength analysis, which is the liquidity ratios, leverage ratios, and evaluation ratios.
Okay, so I'll be talking about the activity ratios first. According to the 3 companies, AHD, which is Amalgamated Holdings, AAD has the lowest ratio, which is better in activity ratios, which means that AAD can cut its investment in the amount receivable and inventory that possess as a burden on the firm operating performance, which is better than others because the other two companies has more higher ratio on them. Whereas the Village Roadshow's ratio is 0.65 and the Amalgamated Holdings is 0.82, which means that the Amalgamated Holdings has the highest ratio, which in this case is not really good for the company investment. Okay, next will be the profitability ratios, which includes 2 kind of ratios. First one is operating profit margin and the second one is net profit margin. The first margin that I'll be talking about is the operating margin. So in this case, the higher the operating margin, the better it goes. AAD, which is Ardent Leisure, has the highest ratio, which is 11.91. Amalgamated Holdings, which is 10.03, and the Village Roadshow, which is 9.61. In this case, the highest operating margin it's earning more per dollar of sales, as well as this pricing strategy is effective. So that means that Ardent Leisure is the best in this net operating margin. Next is the net profit margin. Village Roadshow has the lowest average profit margin of 4.73, which indicates that the company has a low margin of safety and a higher risk that a drop in sales that will affect the profit and lead to a net loss. Whereas for the financial strength analysis, the first ratio is liquidity ratios. In this case, VRL, which is Village Roadshow, has the highest average ratio, which is 1.08. This means that it is the most capable company to pay its obligation, which indicates the company possesses more current assets than current liabilities, and it is in the safe liquidity situation. Whereas both Amalgamated Holdings and Ardent Leisure has the current ratio of below 1, which is slightly better, but they may face problems to pay bills on time. Next is the quick ratio. VRL has the highest average quick ratio of 0.85, which shows that it is financially secure as a company in the short term between AAD, which is Ardent Leisure, and the Amalgamated Holdings. And the second one is the leverage ratios. AHD has the lowest average debt ratios of 6.6, which is in this case the ratio, the lesser the ratio, the better it is. It shows that it depends less on leverage, hence it has a stronger equity position than Ardent Leisure and Village Roadshow. In this case, Village Roadshow has the biggest risk. In this case, that is considered to have the highest debt ratio among the three companies. Ratio in this leverage ratio is the long-term debt to asset ratio, which again, Village Roadshow has the highest average level of debt ratio. It has more needs to have more positive revenue and steady cash flow compared to Amalgamated and Ardent Leisure. It also shows that VRL depends a lot on debts as expenses to operate. Finally, lastly, it is the valuation ratios, which means that this includes the price-earning ratio. It's important to the industry. Amalgamated Holdings has the highest ratio in this case compared to two companies, which is the best between these two. It shows that investors are willing to pay $21.06 of every earnings in every dollar. In this context, the investor will then invest on AHD if they are looking into this price earning ratio. I'll be talking about the cash flow analysis. The cash flow analysis actually means that the operating cash flow divided by the net sales. So in this case, we can see that AHD's cash flow decreases 2.4% from 2013 to 2014, whereas AAD's cash flow increases just 1%, and VRL has actually dropped 6.3%, which has the highest percentage of decreasing compared to the other two companies. This ratio percentage actually indicated how many dollars of cash can the company get in every dollars of sales. So actually, the higher the percentage, the better it would be. In this case, AAD is the only company which has the increase, and although it's only 1%, but it is definitely better than AHD and VRL. On the other hand, when the net income is higher than the cash flow, it indicates that the company may be speeding or slowing its booking of income or costs.
I'll briefly discuss the corporate social responsibilities for each of the three companies. Ardent Leisure and Amalgamated Holdings did not reveal many information in regards to their CSR, whereas Village Roadshow has been open for the last 20 years on all of their CSR beliefs and practices. For Ardent Leisure, there was no information available on their CSR in regards to their annual reports or their websites. Amalgamated Holdings was not very open either, however there was slight information available on their website. However, this information wasn't under CSR but hidden away in other sections. Village Roadshow showed very positive CSR results. Information provided from CSR Hub, which is a corporate social responsibility analysis website, stated Village Roadshow to be one of the highest ranked CSR companies within the industry, with their CSR governance being at the highest rate of the three companies. So just a brief overview of the SWOT analysis for the three companies. AASD's highest strength was that Event Cinemas, which is the most popular cinemas within Australia. However, they had many weaknesses, including their poor CSR information, low asset ratio, and poor cash flow analysis. An opportunity for them is that they've got available room to expand in their CSR. Many threats to them is the Australian currency exchange rate and the decreased disposable income and increased working hours. These threats are the same for all three companies as they in the entertainment industry. AAD strength is that it has great ratios, which were briefly described earlier, and they have outstanding cash flow analysis. However, the weakness is that they also have negative CSR rates, and they only hold 14% of the market share. VRL showed the most strengths with a great board of directors, great CSR policies, and 47.6% of the market share, whereas their weakness was that they had poor cash flow analysis. Another opportunity for them is that the combined strength and opportunity is the future to expand into the Asian companies. And the threats is also the Australian currency and the decrease in disposable income. So in conclusion, it has been obvious that Amalgamated Holdings has been the company best in terms of figures. Ideally, when investing in a company, the figures are the main priority. In addition to this, other factors have also been positive for this company. When we analysed the ratios, Amalgamated had the smoothest number of companies. It also shows that they have the lowest debt ratio, which means it has a stronger equity position. They also have the highest price earnings ratio compared to the other two companies. In regards to the cash flow analysis, AAD outshines the other two with an increased percentage from last year. The other two companies struggled with decreasing values. AHD would be recommended not to invest in as there is little positive data collected, and VRL is a great company, however we would not recommend investing in due to its low financial status.